Hi guys, it's Stock Curry, and I've got a lot of stocks to go over with you today, which means a lot of opportunities to make money in the market tomorrow. But before we get into that, I just want to remind everyone that I'm an analyst, not Jesus, which means I'm not going to get every single stock pick correct. Even the best analysts in the world are only correct about 80% of the time. So, if you know something that I don't, or if you know information that I did not mention in today's video, put it down in the comments below. That will help everyone out so that we can all profit day and night. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for Merrill Lynch and Morgan Stanley, and now I analyze stock picks from the top 15 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every single day watching YouTube videos so that you don't have to. All you have to do is watch one video each day and you will get every single stock pick from the top 15 YouTubers. And all I ask in return is that you hit that like button and subscribe so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright guys, before we get into today's video, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. This video is purely for entertainment purposes only. Okay, let's get into today's stock picks. First up is going to be ABNB. StockMo says he has now purchased Airbnb. That is a significant change in the sentiment we have seen from YouTubers over the past month. Most YouTubers said they were waiting for Airbnb to drop below $120 before buying in. StockMo now thinks that that won't happen, and he has purchased this as a long-term investment. StockMo thinks Airbnb could go up over 1,000% over the next 10 years. He also thinks Airbnb will start going up quickly as the COVID pandemic comes to an end and people start going on vacation again. Next up is AMCI. Smart Trader gave an update today to let us know that this stock is already up 20% from when he first mentioned it 2 weeks ago. He is now looking to take profits and move that money into another stock. Next up is APXT. This is a SPAC, and they are merging with AvePoint, which is a data management company that is specifically focused on the Microsoft Cloud. Chris Hain was the first YouTuber to really push this stock, and he gave an update today. He reminded everyone to be patient and to continue holding the stock for the long term. He has a $60 price target on APXT, which represents a 254% upside from today's closing price. Of course, this is a SPAC, so if you want to scalp this, you can sell right now before the merger, and then buy it again about 2 weeks after the merger. Tech Conversations reminded us that AvePoint said on Twitter that the merger is supposed to occur next month. Next up is BNGO. BNGO's symposium continues through the end of this week. And wow, was I wrong on my prediction for today's price movement. Yesterday I thought it would move 5% or less, and it was up over 40% today at one point. Well, that's why I call these price predictions and not price prophecies. The symposium has been way better than anyone could have predicted so far, so I'm really excited to see what they announce tomorrow on the last day of their symposium. I'm not even going to pretend to give you a prediction for tomorrow, and I have no idea how to play this. It is simply too volatile. But if the past few days were any indication of what BNGO's Sapphire machine is capable of, then Friday should be a huge day for BNGO. Also, and you can take this how you want, my financial friend let us know that a lot of large buy orders have suddenly started showing up on BNGO. Now, I told you last week that a lot of funds are limited to buying stocks that are $5 or more. Also, I think a lot of funds were waiting for confirmation that BNGO was not going to be delisted before buying. Remember, BNGO needed to close above $1 for 10 days in a row to avoid being delisted, and the 10th day was yesterday. So I think that a lot of funds are seeing BNGO as a safe investment now and are buying. Ken and Grace always says to follow the big money, since they have more resources to investigate companies than you or I do. So if you follow that methodology, since the big money is buying BNGO, you might want to also. Next up is CCIV. This is a SPAC, and they are merging with Lucid Motors, which is an American EV company and a competitor to Tesla. CCIV was down a little bit today, and since SPE pulled back in the days following news that they might be merging with ChargePoint, I wouldn't be surprised if CCIV also pulls back a little until the merger is confirmed. there might be some good dip buying opportunities coming up on CCIV. That said, Zip Trader wanted to remind everyone that this is still a little bit of a gamble because CCIV is still in talks with Lucid Motors for the merger, and those talks could still fall through. Many of you were confused when yesterday the CEO of Lucid Motors said, quote unquote, "It is not a done deal." You mistook that to mean that CCIV would not be merging with Lucid Motors. What the CEO meant is what I've been saying all along, that this deal is still in negotiations, and there is still the possibility that this deal might not go through. That's why I told you yesterday to hold off on putting too much money into CCIV, because if negotiations fail, CCIV will most likely drop back down to $10, and that 40% drop could be detrimental to your portfolio if you have too much money in CCIV. Tech Conversations said he sold his shares today and took profits since he was up 60% already. Of course, if the merger is confirmed, and I believe it will be, then CCIV could easily reach my price target of $45. Jack Spencer said he is not selling, and I will tell you that I am not selling either. The fact that Lucid Motors is hiring a Director of Investor Relations and a SEC reporting manager is clear evidence in my mind that Lucid Motors will go public. Ultimately, the decision to hold or sell will depend upon your personal risk tolerance. Next up is CFII. This is another SPAC, and they are merging with View Smart Windows. These windows can change tint via remote control. A lot of companies such as Facebook and Netflix are already using these windows in their offices. There's very little information on this. We don't know when the merger is going to occur, and we don't know what the new ticker symbol will be yet. So this is still a very speculative play. Next up is CLOV. CLOV is Clover Health. This is a Medicare Advantage provider. Joe Biden wants to lower the age that people are eligible for Medicare from 65 to 60. Clover Health could jump significantly once that happens, which is why we have a $30 price target on this stock. This stock was under both our buy under price and our ideal buy-in price yesterday and today. Smart Trader feels like this stock is very cheap right now and recommends buying it. This stock was a SPAC that just completed its merger. Like all SPACs, this stock is going down post-merger. We don't know how low the stock will go before rebounding though, so wait for signs of a bottom before buying. Next up is CPSH. Dead Inside mentioned this company yesterday, and you should watch the video I posted yesterday for full details on CPSH because this is a really interesting opportunity. Today, Dead Inside said that he thinks ARK Invest might add CPSH to their new ARKX space ETF for the same reasons we talked about yesterday with their advanced space technology and patents. Next up is FCEL. Chris Sane said you might want to consider buying FCEL as a long-term play now that it's down almost 15% from its high, but he would prefer to buy FCEL under $16 and closer to $15. Next up is FRSX. This is Foresight Automotive. They develop autonomous technology for EVs. Both Tech Conversations and Mcash pumped the stock today. We had a buy under price on this of $4.15, which it hit 2 days ago. So this stock is overvalued in the short term. Despite that, this stock is hard to borrow, so there's a potential for a short squeeze given the recent run-up in price. They do have a lot of good news coming out, and this company is starting to get contracts, so I get why people are excited about it. Just keep in mind that this is still a pre-revenue company, so expect extreme volatility in the short term. In the long term, their LiDAR technology is really good, and that alone could be a good reason to buy this stock for a long-term hold. The fact that they are developing new products in addition to their LiDAR technology, and the fact that they are starting to get contracts and will start generating revenue soon, are all good reasons to buy this stock for a long-term hold. Unfortunately, this stock is too volatile right now for me to give you a buy-under price or a price target. So you'll have to do your own research to determine what price you are comfortable buying in at. That said, Aegis Capital just increased their price target on FRSX to $10. That price target represents a 52% upside from today's closing price. Next up is FVRR, Fiverr. Fiverr is a competitor to Upwork. Stockmo thinks this stock will double in 2021, and he thinks it will go up 1,000% within 10 years. They are releasing Q4 numbers on February 18th before the bell, and Stockmo thinks they will beat expectations. Next up is GIK. This is an EV SPAC, and they are merging with Lightning Motors. Tech Conversations took profits today, but is still holding a few shares. The merger is expected to be completed in Q1 of this year. Lightning Motors is a small commercial EV company focusing on vans and buses. Next up is JAGX. JAGX just announced a share offering. The stock dropped almost 10% on that news. Ken and Grace thinks this is the perfect opportunity to get in, but he does think JAGX will drop a little bit more still. So he set his buy-in price at $3 and his ideal buy-in price at $2.50. Next up is JMIA. JMIA rebounded just like ZipTrader said it would. Even though this is now above our buy-in price, ZipTrader still thinks this is a good deal. Although he said it could rebound to below $40 since it's artificially pumped up right now due to some good news. ZipTrader also raised his price target from $80 to $90. Technically, I would not be surprised to see JMIA bounce off of its $50 support and drop back down to around $40 to $45 before rebounding and reaching new all-time highs. Next up is LPCN. The news we were waiting for was released early. This was a buy the hype, sell the news stock, and the news came out early, so you should sell if you didn't already. Next up is Macy's. Chris Zane gave an update today on Macy's, saying that this company is flying under the radar while it outperforms Apple, Facebook, and many other stocks. is up 23% from when Chris Zane last mentioned it 2 weeks ago. And it's not too late to buy either, because Chris Zane put a price target on Macy's of $20 in the short term. Next up is MARA. This is a Bitcoin miner. ZipTrader called this an add money to the play stock. He also calls it an obvious play. He has a $60 price target on MARA. Now that it has come back down to a more reasonable level, ZipTrader thinks this is a good deal and a good time to buy. Next up is NGA. This is a SPAC, and they are merging with Lion Electric, which is an EV parts company. They develop chassis, battery packs, cabins, and powertrains for commercial EVs such as buses and trucks. The Lion Electric CEO was on Mad Money yesterday talking about their contract with Amazon. The contract is for the sale of up to 500 EV delivery trucks per year for the next 5 years, dependent upon Lion Electric's production capacity. The CEO also told Jim Cramer that they are building a new factory within 2 years that will be capable of manufacturing up to 20,000 vehicles per year. All of that said, Tech Conversations sold the shares today and took profits. Next up is NEO. StockMo thinks NEO could increase 1,000% over the next 10 years. As NEO continues to build factories and expand throughout the world, NEO will grow exponentially. That said, ZipTrader said there was no rush on buying NEO because the next catalyst isn't until February, which will be when their January delivery numbers are announced. So wait for a dip before buying. Next up is NNDM. The traveling trader thinks ARK Invest might add NNDM to their new ARKX fund. Whether or not they do, there was a nice pullback today, so now is a great time to buy NNDM if you were waiting for a pullback before buying. The pullback was due to NNDM announcing its largest share offering ever. The crazy part is that NNDM really doesn't need the cash. They have years worth of cash on hand already. That means their balance sheet is very strong. So here we have a company with strong financials and incredible growth prospects. So it comes at no surprise to me that ZipTrader just increased its price target on NNDM to $25, which he thinks it could reach within 6 months. There are also many good things happening with NNDM right now that I would not at all be surprised if NNDM exceeds ZipTrader's price target. And for those of you who are wondering, yes, I am long on NNDM and I have no plans to sell anytime soon. Next up is NPA. This is a space SPAC, but it probably won't merge until 2023. That said, ARK Invest said they are adding a new ETF, specifically ARKX, which will be a space exploration ETF. While we don't know which companies ARK Invest will add to their new space exploration ETF, all space stocks were up today on that news. Just keep in mind that the ARKX fund can't legally start trading until March 29th at the earliest. But they can buy stocks before then. So keep an eye on the new ARKX fund to see which stocks they are buying. Next up is PLUG. Chris Zane said to hold off before buying more until it bottoms out and starts to rebound. This will be a great long-term play once it bottoms out. Next up is RIOT. This is another Bitcoin miner, and ZipTrader wanted RIOT to pull back before getting in. but Mara did that instead. So ZipTrader likes MARA better than RIOT right now because it is a better value. Next up is SPE. Larry Jones already said that he thinks SPLE will double this year. Now, StockMo says not only does he think SPLE could double, he also thinks SPLE could go up over 1,000% over the next 10 years. You can buy this stock now as both a short-term hold as well as a long-term hold. The only difference is that if you buy this as a short-term hold, you'll want to sell before the merger on February 11th and then buy back in about 2 weeks after the merger, when these SPACs typically bottom out post-merger and start to rebound. Next up is SENS. My financial friend mentioned the stock today after it rose 70% intraday. Now, my financial friend first mentioned BNGO when it was at $1.33, and BNGO has gone up 500% since then. My financial friend is now mentioning SENS, which closed today at $1.20. SENS manufactures a diabetes blood sugar test that is far easier to use than today's prick test. With SENS, you just have your doctor implant a small microchip into your arm, and then your phone displays your blood sugar at any time. Your phone can also monitor your blood sugar 24/7 automatically and can alert you if your blood sugar gets too low or too high. And they already have FDA approval and sales. Okay, the technology is great. What about the financials? Well, they're not good. This company is losing $19 million a quarter right now, and at the end of quarter 3, they only had $26 million left in cash. So by now, they are most likely down to around $7 million in cash, which would only give them about 1 more month of operating expenses. So they need cash, and they need cash fast. The good news is that because the stock has jumped so much over the past few days, they should be able to do a share offering to raise cash soon. Now, this is a penny stock, and penny stocks are very hard to predict. So if you want to invest in SENS in the hopes of seeing 200% to 300% gains, like we did with JAGX and BNGO, I think that's fine. Just don't invest very much money, because this company is almost out of cash, and you could see the stock go to zero within a month or two. Next up is SKLZ. This is Skills, and they are an esports gaming company. This was another company StockMo mentioned today that he feels will grow by 1,000% or more over the next 5 to 10 years. They have incredible gross margins, which means they are very profitable. And they have huge growth potential as gambling becomes legalized throughout the country. Next up is SPCE, Virgin Galactic. Virgin Galactic was up today because of ARK's new ETF, ARKX, which is a space ETX. It's a no-brainer that ARK Invest will be adding SPCE to their new space ETF. Next up is SRAC. This is a SPAC. They are merging with Momentus. I spoke about SRAC extensively in my Top Picks for January 5th video, so you can go back and watch that to get more information on this company. I said at that time that buying SRAC is the closest thing you can get to buying SpaceX. Well, now that ARK Invest has announced that they're starting a new space ETF, Jack Spencer thinks SRAC could be one of the companies that gets included in the new ARKX fund. If that turns out to be true, SRAC could go up significantly. Next up is TTCF. This is Tattooed Chef, which is in the same sector as Beyond Meat. Their products are sold in stores such as Costco and Walmart. Their prices are also low, which makes their products attractive. So the company is great. We also see a cup and handle pattern forming, which is bullish. Smart Trader put a price target on TTCF of $50. ZipTrader also has a price target of $50, although ZipTrader said this is a lukewarm play right now. In light of both YouTubers putting a $50 price target on this stock, I'm raising the buy-under price on TTCF to $26 and the ideal buy-in price to $23. Next up is TYME. This is just a reminder that TYME has a FDA drug presentation on January 17th. You can buy the hype and sell the news by selling prior to January 17th if you want to, or you can gamble and hold through possible FDA approval. It's up to you. Next up is ZOM. This is Zomedica, and this is a veterinarian biomedical company. It has pulled back quite a bit over the past few days, so is now the right time to buy the dip? Informed Trades thinks it might be, but there are risks with buying right now. Informed Trades is concerned that they have not yet announced a stock offering, which most companies do when their stock price jumps significantly. So that could be a downward catalyst. Technically, ZOM just completed a bull flag today, so that would point to the stock rising tomorrow. As with all penny stocks, this is volatile and risky, and I can't possibly predict where the stock is going to go next. But if you've been waiting for a dip to buy, you can either buy now or continue to wait and hope for a share offering announcement to buy. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what's your favorite stock pick for tomorrow. And if you want to get some free stock, sign up for Webull through my link in the description below. That will help you out, and it also helps the channel out. And finally, remember to hit that like button and subscribe if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.